This is David Morgan of the Morgan Report, and I'm doing a video blog this evening, the 4th of December, 2017. This has to do with the SRS Rocco report that was published today. And the title reads, The Disinformation War, the attempt to disregard silver investor demand in the market. So first thing I'm going to do is reference Steve's work and make some comments, go into what I partly did on the presentation I did in New Orleans, and then just basically go through the high points of this article. So in my presentation in New Orleans, the title of the presentation was Silver Past, Present, and Future. And I'm going to go through this pretty quickly because really I don't want to dwell on the whole topic. I want to stay focused. So here, this is from the GFMS. This is the right from their report years ago. This is like the 2008 report. And what this shows is the deficit that I keep talking about, that the above ground supply diminished from 2 billion ounces down to 500 million between 1990 and 2006, where they crossed over. And that's from not CPM, that is from GFMS. So that's part of the story. The rest of the story is, again, this is not CPM. This is from the World Silver Survey, which is produced by GFMS, which is the Silver Institute, which is run through Thomson Reuters. And this is from the latest one, 2017, and this is an exact quote. Identifiable above ground stocks increased 14% year on year. So that's basically year over year to 2.5 billion ounces by the end of last year, which means the end of 2016, which is basically a year ago. These inventories could cover 30 months worth of physical demand at 21-year peak, end quote. So far I've shown you absolutely nothing at all about CPM Group. This is all from the Silver Institute, which is what Steve refers to most often. No complaints. I look at both studies and we do our own thinking. So this chart is from CPM Group, and it makes a point that Steve does in his article. So I'm really going to try to emphasize this, which is the quote-unquote silver market balance, surplus, deficit, surplus. So if you look at this just casually, what you will find is, again, well, I say again and again that from approximately 1990, right here, to 2006, there was this deficit and there was a depletion of above ground stockpile. However, as bullish as that is, and it is, what you will determine if you look at this is this red line, which tells you the price. And at this point in time, where you had very, very low, in fact, lowest in modern history inventories, basis both the WSS and the CPM Group, you will find that the price at that point was, according to this chart, about $12. So from 2006, 2007, 2008, 2009, 2010, and 2011, the above ground stockpile grew and the price got to, according to this, $35 an ounce, but we all know it peaked at 50, but we'll just, for talking purposes, go with this red line. So what this implies is that the deficit or quote-unquote surplus really doesn't determine the price, and there's a reason for that. It's called investment demand. I do want to digress briefly here and look at, the peak here at 2011 and point out to everybody that this is the exchange traded products. You can look at Sprott's, PSLV, the Physical Silver Trust. You can look at everybody here. I won't name them all. You can read these. But basically the funds, or what I call holding companies in some cases, have not increased their silver position basically. I mean, it's basically a flat line across here from the peak of 2011, which means there hasn't been very much investment demand from this sector, which is the exchange traded products, referred to as the ETPs. Just pointed it out. I don't think you want to, argue with me. You can, but it's it does suggest that there just hasn't been that much interest in physical silver by this subgroup of long-term investors. And this chart is from CPM. And I think this is very important for people to realize silver's share of global financial wealth ex real estate is about 0.02% or less over the last several years, which means gold is about 1%. So, I mean, the amount of money that's in the silver market is pitifully small, which means anyone that knows anything about markets knows that it would not take much new buying for that number to go from like 0.02% to 0.04% as an example. It's just a very, very underappreciated market for a lot of reasons. So again, I don't want to go through too much of this. You can read the article from Steve, but what he talks about here is Jeff explains to analyze the silver market correctly, you have to look at silver at surplus and deficits based supply versus total fabrication demand. Further, it criticizes industry analysts that may be promoting metal by throwing investment demand to arrive at a deficit. Now, here's where Steve does this job that's really interesting, and it really is what I just showed you, but he does probably a better graph than me. And he shows you that, where we had these big deficits, here was the average price during this deficit period. And this is when we had all this quote unquote surplus, and the price was far higher, like 4 times as much, 400% gain. Why is that? Well, the reason is it's investment demand, pure and simple. I'll pause here because this is important. In fact, I will do a public shout out to Steve because as familiar as I was with the gold oil ratio, I really hadn't thought of the silver ratio as well. And of course, I do know that gold and silver are 85% correlated. So on that basis, if gold tracks oil pretty well, that would imply that silver does as well. But he does a great job. I love his graphs and I love his thinking on most of the stuff that he writes. And by the way, he had written me an email about my take on it on the Kitco interview. And I told him I only got to tell half the story. What I was trying to convey was one, half the story. I wasn't talking about investment demand. I didn't really have time, nor was I asked about it, or, basically the interview ended. They control the interview, not me. But obviously I'm filling in that second half of the story, which is investment demand. So I digress to come back. Silver and gold, highly correlated to oil price. You can read that for yourself. And I think the most important chart in here for me is what he points out, which is right here. World physical silver bar and coin demand. So here you are, pre-2008 financial crisis. And what you'll find is that was the kind of investment demand that we had. Post the 2008 financial crisis, it's up basically 4 times. Isn't it interesting that when we're eating above ground stockpiles, the price is, according to Steve, and I haven't verified the math, but I'm sure the idea is absolutely correct, $5 an ounce. And then when stockpiles are building, but investment demand is surging, it's 4 times higher, just like I showed you a minute ago, $5 versus approximately $20. So as he says, as you can see, world silver bar and coin demand nearly quadrupled after the 2009 housing and banking collapse. So I really want to try to stay on principle and not on personality. We all have them. I've got my lovers and haters like everybody else, and that's fine. I do want to be fair here. So I am on the speaking circuit, as almost everyone knows, and I am, see Jeff fairly often. On the fact here is, one, Jeff's lecture this year at the Silver and Gold Summit, I was unable to attend, unfortunately, because I do like to hear his perspective. The previous year, I did attend, and what he pointed out was for a truly balanced portfolio, and I may be off slightly, but to be weighted properly, you needed something like a 25% exposure to the precious metals. And again, going back, that chart I showed you a moment ago about silver's actually making up 0.02% of the world's financial product or financial demand for investments across the board is really quite stunning. Gold comes out about 1%. So, to be fair, Jeff has pointed out that most people are underweighted silver, and that's just all investment classes, be it individual investors, family offices, sovereign wealth funds, pension funds, whatever. And most people don't have nearly the exposure that Jeff has calculated would be required. So I want to be fair on that. I think, we all get kind of mixed, kind of emotional. I know silver is about one of the most emotional investments out there. Most people think gold is, but I've been in both worlds for a very long time. It's been my experience that silver seems to bring out more emotion than gold even. So let me just finish by saying that there has been a lot of loss in investment demand in silver this last year or so. A lot of investors are tired of a flat market, flat to down market. And a lot of cryptocurrencies have certainly caught in the attention of investors. What's interesting is that really when you would probably need financial protection the most, which is from this day forward, in my strong view, is when a lot of people are basically giving up on the sector. And yet the smart money or managed money particularly is moving in to this sector quietly at that. So I will leave it at that. And you can make up your own mind. I think that I could go on, but the point is, I want to make it clear to everybody that investment demand, of course, is very important in the silver market. And the way that the deficit is defined by Thomson Reuters, the WSS, the World Silver Survey, is different because they use the investment demand to get the deficit than what I would consider to be whether or not the above ground stockpiles are increasing or decreasing. And the reason I gave that half of the story first is I've gotten so many consultations, calls, emails, etc., that silver is basically scraping the bottom of the barrel. There is no silver left, blah, 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 blah. And that's not true. But just because there's a large stockpile doesn't mean that the price is based on that only, as Steve pointed out in this article, as I just pointed out during my lecture in New Orleans. And hopefully people aren't giving up on the silver market for just because there seems to be a build in inventories. That is only half of the story. So hopefully you've got all the story now to make your own decision, and I'll leave it at that.